consistent growth performance for the group. For financial year 2015, the group has registered an annual increase of 8% in profit after tax and non-controlling interest to 1,919 million ringgit. This translates to a compounded average growth rate of 16.7% since the financial year 2007. This is a continuation of our consistent performance, which has resulted in increasing shareholders' value as reflected in the upward trend for our earnings per share, which has risen by 8% to 63.8% for the financial year 2015. However, return on equity has been steady with a slight dip this year, reflecting a higher capital base. Over the years, our sustainable value creation has enabled us to reward our valued shareholders by increasing our total dividend payout from 41% last year to 43% within our guidelines of 40 to 50%. Additionally, we have decided to reward shareholders earlier by distributing a higher proportion of our half-yearly dividend that was paid on 16th of December 2014. The 12-cent dividend paid in the first half year comprises 44% of the dividends declared in the financial year 2015 as compared to 30% in the financial year 2014. On the group's continuing portfolio rebalancing strategy to de-risk our assets from the vulnerable income group, the group gross loans contracted 1.7% year-on-year. This is reflected in a decrease in auto finance and lower exposures to less preferred sectors such as non-residential property financing. We remain confident in mortgages, selected wholesale banking segments, having registered positive growth in these areas. Our deliberate policy is to target better quality assets has led to a more balanced loans portfolio. Deposit grew 2.7% to 92 billion, of which 20% is derived from low-cost deposits comprising of current accounts and savings accounts. Our adjusted loan deposit ratio has also improved from 88.7% to 83.8%, while liquidity coverage ratio is comfortably above 100%. Our asset quality continues to improve with gross and bad loans ratio decreasing from 1.9% to 1.8%, which resulted in a positive net write-back of loan loss allowances. This is reflected in our loan loss coverage at 105%, which is better than the industry's average of 99%. Our capital management remains sound, with capital adequacy levels at AmBank and Berhad, AmBank Islamic, and Investment Bank exceeding the internal targets as well as the minimum regulatory requirements. All in, the improvements in our performance has allowed us to achieve all key financial aspirations with an increase in PATMI and dividend payout ratios. I would like to now introduce highlights of AmBank first quarter results for 2016 for the period ending 30th June 2015. This was announced yesterday. We started the new financial year at a slow pace due to soft market conditions. However, excluding the one-off gain from the sale of the business or the life business in first quarter 2015, the group's underlying profit after tax and non-controlling interest rose by 3% year-on-year to 340 million ringgit. On a year-on-year comparison, gross loans contracted by 2% to 85.7 billion due to our portfolio rebalancing strategy and lumpy corporate repayments. Deposits declined to 90 billion as intense market competition resulted in wholesale bank opting to forego higher cost deposits. Our adjusted loan deposit ratio has improved to 84.3%, reflecting a comfortable liquidity position. Our total capital adequacy ratio continued strengthening to 16.1%. For the coming financial year 2016, businesses and economic conditions are expected to remain challenging, as Malaysia's economic growth is expected to moderate from 6% in 2014 to 4.5 to 5.5% in 2015. This stems from lower crude oil prices amidst expectations of slower consumption spending and decelerating export growth. On the external front, the recent yuan devaluation, ringgit depreciation, and potential hikes in US interest rates could lead to further market volatility. In the retail sector, the high national household debt and rising cost of living have resulted in a moderation in consumer confidence. The government is expected to adopt prudent and pragmatic macroeconomic policies to rein in fiscal deficit, public and household debt. For the financial year 2016 to 2017, we reaffirm the group's strategic directions. Retail banking will continue to strengthen its franchise by targeting selected segments, while wholesale banking aims for higher flow of business and diversify concentration risk in large customers. General insurance aims to capitalize on our top market position in motor, grow in selected products, and prepare for a D-tariff market in January 2016 with our pricing capability. Supported by our strategic partner MetLife, our life insurance business will focus on increasing productivity in bank assurance sales and establish a new database partnership. For the financial year 2016, the group is committed to deliver steady underlying growth with net profit after tax and non-controlling interest growing at 3 to 5%, which translates to an ROE target of 12 to 12.5%. In summary, we have met our key business and financial 2015 targets. Over the long term, global and local business and economic conditions are expected to remain challenging against a backdrop of increasing stringent compliance requirements, and the banking sector is expected to experience a slower loans growth and narrowing net interest margins, whilst asset quality may come under pressure. On the external front, the recent yuan devaluation, ringgit depreciation, and a potential hike in the US interest rates could lead to market volatility. There are still some bright spots in Malaysia, as Malaysia has a relatively high savings rate, while the employment rate remains relatively low. We will focus on opportunities and execute on our 4 strategic priorities for this financial year and the next. We're implementing various initiatives across all divisions to aggressively expand our business, acquire new customers, explore new opportunities, build new relationships, and better serve our customers. We are confident that we will progressively achieve our goals and targets. While the business environment has become challenging, we remain a well-capitalized bank with a consistent track record for sustainable value creation and a good corporate governance culture. This brings me to the end of this presentation. Thank you. I'm going.
Thank you, Dr. Azmi. And now the floor is open for questions.
Since you talk about slowdown in loans and margins compression, maybe you can give us guidance on what kind of loans growth you're looking at this year and
Thank you for that. I mean, yeah, certainly given the market and we've seen GDP estimates come off for the coming year, then in line with that, our loans growth is expected to be lower. So our guidance is between 4 to 5% for the year. Though if you see our quarterly results, we did get off to a slow start. That reflects a couple of things. Firstly, the continued rebalancing of the auto finance portfolio, though our decline there has slowed relative to what it was. And the other component is some lumpy repayments on the corporate side, but the pipeline and approved deals ready for drawdown looks very strong. So we're still targeting that growth of 4 to 5% for the full year.
what's your net growth last year?
Sorry?
Net growth last year.
For loans or?
For loans.
3. So what you're referring to is what
Loans.
loans growth.
Profit was 7.6%.
Okay.
Okay.
Yeah.
You were looking at 4 to 5% this year, right?
Yes, so we're looking at 3 to 5% this year. So last year the biggest impact was on the auto finance portfolio. So we've been repositioning the portfolio.
That's for profit, right? I'm actually talking about loans growth.
Yes, loans growth.
Loans growth.
She's addressing loans growth.
4 to 5% or 3 to 5?
This year, our focus, so for the coming financial year, we are targeting 4 to 5% growth.
I think your question was why 3 now is higher than last year.
Yeah.
She will tell you why.
So last year we had on the auto finance portfolio it contracted 3 billion, and so that's what offset any growth on the wholesale side and mortgages. This year we're not expecting the same level of contraction on the auto side, and we're expecting continual steady growth in mortgages along with good growth in wholesale, which will come from the SME and commercial segment.
So, sorry, what was last year's loans growth? 3%, I think.
This year higher.
This is higher.
That's why you
Portfolio,
begin
yeah.
wondering what's happening.
Yes.
When I think I know where you're coming from. If you're predicting that the economy will slow down, the challenges, how is that our numbers are bigger or higher than last year's number?
Yes.
That was your question.
Yeah.
So
as
if many
mentioned by Mandy, last year we were rebalancing our HP portfolio. The contraction in high purchase was quite drastic last year. It was about we had a net reduction in our high purchase portfolio of 3 billion ringgit. So it was very high. So, right, and our areas of growth, like mortgages, was slowly moving up. Now we pick up momentum already. So I guess now what will happen is that we are relooking at the HP portfolio to how to actually do a bit more, but not to how to manage how do I say a transitional thing. Last year was a bit too drastic for us. Right? So the HP portfolio here will have still a reduction based on our de-risking strategy, but it will be more on a managed basis, going for different segments and so on. Then at the same time, we are growing our mortgage portfolio, which is now picking momentum. Last year we started it, but it will pick up more. The momentum will pick up higher this year and so on. So that's where you see the numbers are higher.
So it's also, when you look at the growth in the industry, it's where the growth is coming from. So last year, the industry grew quite fast in auto. So it was double-digit growth, whereas we contracted. This year, since GST came in 1 April, car sales have dropped dramatically. So although we're still quite tight on our writing and within the auto portfolio, our growth relative to system is actually better. So that's the key. So it is important to look at where the growth is actually coming from.
And in terms of interest, net interest margin compression, you're looking at how many what's the level last year and how is it going forward next year?
Yes, so we're expecting a similar level this year to last year. So we've guided the market on 15 to 20 basis points. Now, at this stage, given the first quarter and where the market is tracking at, that is going to be a challenge. Two things, given slowing growth, there's a lot of pressure on writing the good quality assets. So as we reposition the portfolio to better quality assets, then because it's risk-adjusted returns and margins are narrow, it's also a matter of where we're getting the growth. So more growth is coming in mortgages, which is slightly lighter margins than on the auto portfolio. What we've also seen is there's a real focus on getting deposits, and everyone is after deposits, and the liquidity in the market, so the deposits available, has come off a little bit. So the prices for those deposits has gone up, and given those prices have gone up, then that will also have an impact on our margins as well.
What was the level last year? I mean, looking at your guidance is 15 to 20 basis points. What was last year?
Very similar.
Similar. And you say it's going to be challenging. What's the worst case scenario?
So at the end of the first quarter, for the quarter we were down 21 basis points margin contraction. Within that there were some one-offs. So I'm hopeful that for the full year we'll be able to stay broadly within that range. But at the same time we are also looking to get some loans growth as well. So we need to balance the two. And also it is difficult to tell exactly where the market is going to price on the deposit side. So if the deposits dry up a little bit and we're all chasing them, then obviously that will drive the prices up.
Hi, could you share with us your NPL levels in the auto finance segment? Has that improved or has that deteriorated? And also, is that where the biggest portion of your NPLs are coming from?
Yeah. As part of the repositioning for the portfolio in auto finance, that's been exactly about that. So for us, what's really important is sustainable risk-adjusted returns and ensuring when we lend money to our consumers that they can afford to pay us back. So we were very aware of the high household debt to GDP, rising cost of living, and that some of our consumers may come under pressure going forward. So that was why we took a very proactive stance on the auto portfolio to reduce our exposure and to tighten our lending to what we call the vulnerable sector. What we've seen, because we started this journey about 18 months ago, is in fact our non-performing loans, impaired loans for auto, has continued to improve, and so it's come down quite dramatically. So the strategy, although we're getting less loans growth, it is paying off from an impairment perspective. So it's improving every month as we go forward. And what we're also seeing is the collections, so those historical loans that did go impaired, what we're collecting back from them is continuing to improve as well.
But what is the NPL level?
We don't disclose by specific product, but what I can tell you is it's improving, and the retail numbers have also overall improved as well.
We are happy with the numbers. Any more questions?
Any plans to do a rights? I was talking about the rights now. A
To
rights
do
issue, equity.
At this stage, we have no plans to do a rights issue.
Okay.
Hi.
Yes.
Yeah.
Yes.
May I know when can we expect the official appointment of AMMB of the company?
Official appointment.
Official appointment.
Why do you say official appointment? Have you? You must know something that I don't know. As far as I know, they're still looking. They're shortlisting the candidates and they're still finalizing that. So we just have to wait.
Are you?
I think, what I will say on behalf of the group, though, is that we are very fortunate through this time to have Datuk Azmi as the acting group MD. Datuk's been with the bank for 34 years, experience in financial services, was the acting group MD before, deputy group MD before he became the acting group MD, so very familiar with running the bank, and spent 12 years running the retail bank, which is a large proportion of the group. So for us as a senior management team, we are very focused on continuing on the strategy that we have and delivering for our shareholders.
So would that be appointed as
No. Any assumptions? I think the answer is basically that the board has appointed an international search company to shortlist basically candidates for the GMB position. As you know, this is an important position, so I would leave it to the board to do their own the process with it. There is a process, and I think when it happens, we will announce it. I'm sure we'll be excited to announce it.
You see, the board has shortlisted candidates. Can we know how many? And
I don't know because this is not. It's above my pay grade actually.
Are you one of the shortlisted?
I don't know. I'm sorry, I don't know. This is above my pay grade.
Did they give you a timeline as when they would announce it?
They don't answer to me.
No, they don't.
Just joking, just joking.
The really important thing is the board understands the importance of getting the right CEO.
That's right.
So it's going through a very thorough process.
Rigorous process.
And it's a very vigorous process. We've engaged an external recruitment firm. So for us, it's about ensuring we get the right person in the role. And as I mentioned, in the meantime, we have an acting group MD who's leading the organisation.
So don't quote me, it's above my pay grade. That is. But I guess I think that the important message that the board is, it is a process, it's an ongoing process.
Hi,
Yep.
Michelle from Starlist. Are you in any merger talks?
No.
No?
This RHB thing has been going on for years. So it's like, no, not at present. Well, if you look at it's a strategic piece with the AmBank Group. As you're aware, we have now recently, 1st of April, we've got a new Islamic banking head, Ekwan, who just joined us. And the strategies that now been drawn actually, there will be a strategy how to drive the Islamic business within the group. It is an important piece for the group as well. In fact, we even got new board members onto the advisory board to give us inputs and direction how to go forward. So as it is at the moment, it's doing reasonably, how do I say, it's doing reasonably well compared last year's results. It's about there, and they're not fluctuated and so on.
So in fact, the Islamic business had a good first quarter, so double-digit financing growth in the first quarter. Well, gross financing, year-on-year.
The growth for first quarter.
For the first quarter.
Yep.
Can you share your prospect of
This year? Prospect of this financial year. How do you see?
As mentioned just now by Mandy, the guidance growth, loan growth is about 4 to 5%. The profit numbers we are projecting is
3 to 5%.
3 to 5% growth
ROE
from,
12.
and ROE of 12 to 12.5%. That's the numbers.
I think what we are forecasting is that we do believe it is going to be a slower year and a more challenging environment. I think we all know at the moment Malaysia, the ringgit has devalued. The market is pretty volatile at the moment relative to the US. There's things happening in China and the depreciation of the yuan. We've seen commodity prices come off. So all of those things, along with a little bit of political risk in the country at the moment, perception that is creating a little bit of uncertainty. So we do see it as being a reasonably challenging year for the banking sector.
Do you have any plan to cut down the manpower as the industry is slowing down for your company?
Our focus has been ensuring that we manage our efficiency based on where the growth is, and it's always important to make sure you get ahead of the game on that. You would have seen in our strategy that last year we started on a broader simplification and optimization program, and we are seeing the benefits from that come through now. There's no additional major program planned.
Yep.
May I ask, is there any investigation taken due to the leak of information of prominent figures, private banking, historical transaction?
There is investigation by the bank or
on
is
the
investigation
bank.
definitely by the
On the
government?
bank, because it will affect the bank's reputation since they are vulnerable of the customers' information. So I thought, is there any further measure being taken to further protect customers?
I guess I think this question was asked at the AGM, and I think the standard response that we do not discuss customers matters because of as you're aware, the IFSA and the FSA has got very strict rulings on customer confidentiality, right? Even the governor at the last meeting said, no, I also cannot say much. Even the government herself said that. So I mean, I don't have no comments on that one. So I think we're not at liberty to discuss anything, any customer, even whether it is or not. I'm not saying yes or no, but I'm not there.
I'm not asking for a comment. I'm asking if would the company taken any further measure to further safeguard
No, that answer would be, for example, when this thing happened, I think, let me just tell you, the central bank, when this thing happens, I think everybody, any good board, any good management will say, right, if this thing can happen, let's have a look, what is the process like, where can we improve, what are the gaps and so on. It's a standard thing. For example, if there's a fraud that happens in the bank, for example, the HP, we will see whether our process are in place to prevent further frauds and so on. Okay? It's a normal reaction for any management, for anything where we feel that it can affect the bank's efficiency or legislation and so on.
I think what's really important is you raised a concern around whether the bank had leaked any information. We take compliance with the Financial Services Act very seriously. We're bound by that, and we continue to comply with that. Hence why we're not able to say anything, because we would get ourselves into trouble if we then disclosed it. Because just as you wouldn't like, or I wouldn't like, if someone was having a look at my personal accounts. So the bank has not leaked any information out.
I'll be more general when I'm saying that it's a natural reaction for any management to react to anything. For example, I give recently, when the ringgit exchange, the depreciation of ringgit, it's natural the management will wake up and find what's the exposure to, what's the impact the bank and so on. That's a natural reaction. If something happens, for example, there's a cyber, you hear like there's a cyber, nowadays got all this hacking thing, whatever it is, the bank will automatically, the first thing the bank will do is say, right, where do we stand in here, for example? Are we good? Is our controls good? Is our process good, for example, right? That's what banks do, that's what as management will do for anything, whether it is IT, services, the economy and so on. We always will react and see how it affects the bank.
So there are measures taken to improve.
Of course, it's a continuing thing. It's a continuous thing.
Did it affect the company's private banking reputation that maybe customers in that sector have less faith in the bank because?
No.
Hi, can you share more about the impact from the weakened ringgit to your bank business? Weakened ringgit, the impact from the weakened ringgit.
So the ringgit has devalued against the US, so I assume that's what you're referring to. We are a ringgit bank, so as you know, we're Malaysia's bank, so we're a local bank, and so pretty much all of our business is in ringgit. What there is a real opportunity to support our customers if they are doing overseas transactions, so we can do FX deals off the back of the volatility. So in fact, it creates some opportunity for us.
Do you think, how do you see the ringgit performance recently? And do you think that the political issue is one of the reasons they make the ringgit weaken?
Oh, we are an apolitical bank, so we do not answer question of politics, but it affects the market and so. So I rather stay out of that particular area. Okay.
Can I just ask you, how was the EGM just now?
Well, the EGM.
Yes. Both the AGM as
It went
well
well.
as the EGM.
It went well. It's a normal thing, the usual questions, and all the questions were answered and so on.
What about the dividend? Do you foresee for the FY2016, are you going to propose higher dividends? Will shareholders look forward to better dividends?
I can tell you, for example, definitely we want to reward the shareholders as it is. For example, as I mentioned just now, the dividend has increased from last year. We increased the dividend from last year. If the numbers permit us, for example, of course we want to reward our shareholders, and we've got ANZ is a big shareholder. They also want a dividend, and our chairman is a shareholder, also they want a big dividend and so on. So again, I'm sure that if the number permits us, we will give out more dividend.
So our guidance is 40 to 15%,
Yep.
and
40
we
to
will
50.
track within that, and then obviously based on where the opportunity is from the profits.
Yep.
But what is important to note as part of rewarding our shareholders, we have changed the payout policy, so we now pay out roughly 50% as the first dividend, as the interim dividend, and then the same for the final dividend, whereas historically we used to pay out a third.
So it's 50%?
Roughly half of the dividend. So the dividend will be 40 to 50%. So that's our guidance range of the payout ratio. That actual dividend then that gets paid twice a year. So first the interim dividend and then a final dividend. We now pay out roughly half, it's a little bit under the projections, in the interim dividend. So what it does is rewards shareholders on a more regular basis upfront.
Can I just clarify, is AMMB under probe from Bank Negara or any other party with regards to whether it followed certain procedures with regard to certain controversial fund transfers?
As I started off just now, that there's an area that I'm not at liberty to disclose or deny or agree because of the IFSC. We don't discuss customers' issues.
This is not
But
just
what we
this
can
is
read,
whether you were under probe by Bank of Darul or not. You know, it's a question.
Very tricky question. I'll answer that.
so what we can reassure you as a very transparent and open bank that we will continue to cooperate fully with all appropriate authorities.
Does AmBank have any expansion plan in the short term, regionally or domestically?
At the moment, we do not have any regional aspirations at the moment. In fact, what's happened in the last 1 year is that we have closed down some of our overseas operations. But going forward, I guess as we look at opportunities and so on, it could be one. But as of now, we do not have any. We're just concentrating on the domestic business.
And I just want to clarify something. Just now you mentioned that the mortgage, the loan growth is expected between 4 and 5% for this year. How about your overall bank's performance?
Mortgages. Last year we grew by last year the mortgage grew by 6%, if I'm not mistaken, in the report. And this year we're expecting the numbers to be higher.
Yeah, we will expect continued strong growth in mortgages relative to systems. So at the end of the first quarter, our growth was 6.7% year on year for mortgages, so up slightly on last year.
May I know what are the process involved in the case of to help the bank avoid controversial transaction in such a big amount?
You are really.
I mean, what I'm trying to say is that I want to know the process that involved when there are big amount of money transacted through the bank. What are the process involved to avoid the case that this money are not involved in money laundering?
As you're aware, for example, we have an Anti-Money Laundering Act. Therefore, if you look at the provisions, basically, that the banks have to comply with those provisions of the Anti-Money Laundering Act. So processes and systems are put in place in order for the bank to comply. So we have those processes, and we will comply with the process as required by AML. So I don't want to go into the detail about the process level, but what I can say is that we have processes because it's required by central bank anyway.
To ensure that the money is clean, every money that goes through the bank is clean money.
You have to read the act and understand what our responsibilities are, like, you know. If you look at the anti-money laundering provisions, for example, right, it is not about the bank. The bank's job is just to report to central bank of what we see, whether it's suspicious or not suspicious and so on. This is the bank's responsibility. It is not for us to
Yeah. You guys just flagged the issue. So is there any issue being flagged so far?
There will always be issues, I'm sure. I mean, our job is to flag it and basically to report to central bank. That's a requirement of the Act.
Including
any transaction will matter. Okay.
Question for the 2015 is you achieved 7.6%, right?
7% growth, yeah.
Yeah, and FY16, you have 3 to 5% is lower than last year. So, any can you share why this happened?
Yeah, I mean, firstly, just to clarify, the 3 to 5% growth is underlying growth. So last year we did have the benefits of the one-off sale of 50% of our life insurance and family takaful business. This year, as I've mentioned, we do foresee that the economy and the Malaysian growth is slowing, so banks are impacted by how the economy is performing. So relative to that, we're seeing a slowing market environment, and so therefore our growth is positioned off the back of that.
So you are following the growth of economic growth of
Relative speaking, yes. I mean, our growth in some areas will be a little bit slower than the market based on our repositioning, but generally the bank's growth does get impacted by the growth of the economy as well. So if you think about GDP last year in 2015 was 6%, this year the projections are 4.7%, so they've come off.
Just one last one. Just curious, you were saying that economy is expected to slow, but why do you guys expect the high mortgage loan growth? Is it because of you guys some kind of strategy?
Yeah, I mean, that's a really good question. I mean, it will be a little bit up on last year. It's more relative to market. So we have grown slower than market on mortgages historically, whereas given the focus and the work that the team's done on improving the processes and targeting some new areas, then we're confident that we can grow closer relative to market this year. And the consumer mortgage market has still grown reasonably well. And there's also the base effect. So when you do year on year, there's a base.
Can you elaborate more on the selective market issue or the selective market?
Sorry?
Can you elaborate more on the selective market that you're talking about? The selective market for your target market for the mortgage.
Yeah, so it is broader. I mean, the key focus for us in areas where there are opportunities and we've got more specific propositions is around, for example, young professionals, so helping people get into their homes. We're looking at the secondary market as well. And also more broadly, our focus is more on variable rate loans given the environment that we're in.
Considering the slowing down in the economy, and I believe now the property market also is slowed up, so we should take on those markets.
Yeah, I mean, as I mentioned, there's a couple of things with property. Our growth is relative to system. So we have been growing slower than system. So what we're saying this year is we will be growing in some areas closer to where everyone else is growing. So it is a relative thing. What I will clarify though is what's important is on what we would call the property development, so construction of property, that's an area that we are very conservative on. And our view is potentially that there's an oversupply in the market. And so if you look at our non-residential property growth, we have been contracting, the market has been growing. So there are different segments. So helping people into their homes is something we're very keen to support and we're continuing to grow that area, whereas new developments of office blocks and those spaces we're a little bit more cautious on. On the non-residential, yeah.
Any other questions from the media? So with that final answer, we have come to the end of the press conference today. We would like to thank